Welcome to the KingCast, sponsored by the Economics Division of the Social Sciences Department. I'm your host, Frank Roach. With me today, as always, is Nicole Rohr. Morning, Nicole.
Good morning.
Jake Murphy. Hey, Jake.
Good morning.
Jack Zipper. How's it going, Jack?
I'm good.
Good to see you. And Raheem Jiswal. Welcome,
Morning.
Ray. How you doing today?
Good. How are you?
Good. Our third week of our KingCast. We actually got our KingCast posted for the first time this week. The powers that be liked it, and we got a bunch of hits and some nice comments about it as well. Our editing team is doing a great job getting it prepared for us, and really happy the way it's going. I hope you are all enjoying it as well. All right, on today's show, a surprise drop in September home sales. Housing's been strong, but not for that data point. The election is finally upon us. Tomorrow will be the election. How investors should be preparing for market volatility. What did we learn this week? Our favorite segment, King Things in Sports. What's going on in our great community in the sporting world? Our guest, Brian Murphy, CEO of Breather and Economy in the Markets. As always, we start out with a hot topic. Nicole Rohr has one today. Nicole, we've seen some robust data on the housing sector, always to the upside. But this past week, we got a drop in September pending home sales, those homes that are in contract waiting to go to closing. So a little surprise. Why don't you tell us about what happened?
Okay, so pending home sales, a measure of signed contracts on existing homes, fell 2.2% in September compared with August, according to the National Association of Realtors. The benefits of low interest rates have been completely erased by steep prices, especially in expensive urban markets, said George Otiu, a senior economist at Realtor.com. The Northeast, which is seeing the most urban flight from New York City, was the only region to post a gain, with sales up 2% for the month and up 27.7% annually. Affordability, however, is clearly playing a role in September pullback. Mortgage rates, which set record lows in August, bounced slightly higher in September and remained there for the entire month. While rates are still historically low, home price gains accelerated dramatically over the summer as demand outstripped supply by a wide margin. I think we'll see much more inventory than usual spring 2021, said David Fogg, a real estate agent in Burbank, California. He also said we'll have all of the 2021 plan sellers, as well as most of the 2020 plan sellers who put their move off for a year, and based on his call level, he thinks in California we'll see more new plan sellers than ever.
Okay, really surprising. I think that affordability issue is a real challenge, right? We have the affordability index we track regularly. This is now above highs from the 2007, 2008, 2009 period. Really surprising. Of course, we had never expected this kind of reaction in housing. Still, even though September data was below expectations, still robustly higher over a year-over-year time period. So really good news there. And great news if you're a homeowner, right? And you're looking to sell, okay? Those who like higher prices are the ones that own assets. Those that don't like higher prices are the ones that have to buy the asset. So that home affordability issue is real. Mortgage rates are below 3% for a 30-year mortgage for good credits, so historic lows for sure. Really interesting developments in housing. The only area we're getting excess supply right now is in the big cities, right? Number of apartments on the market for sale and rent in New York City is at a record high. So really interesting stuff. Nice report, Nicole, as always. As we talked about last week together, just briefly, we have the election finally upon us. 4 years, the Democrats have been excited to get to this point to replace President Trump. In 4 years, the Republicans are trying to work to mollify the kind of chaotic presidency of President Trump in his Twitter feed. And so, like every other president, Trump wants another 4 years in office. And like the opposing party, they want him out. It's been a stressful, anxious time for the whole country for the past 4 years. Many people would like to be over with it, right, and replace Trump with Biden. And voters will decide on Tuesday. However, it won't be that simple. Polls do indicate that Biden still holds the lead nationally. He seems to hold a lead within the margin of error in several swing states like Pennsylvania, Wisconsin, Michigan, Ohio, Florida. But Trump has closed that gap. There is concerns on the part of pollsters about the shy Trump voter who may not have been willing to tell the truth in polls. And so some speculate that the polls skew to the upside for Biden in a way that suggests Trump voters aren't saying what they're going to do, right? And we had Michael Moore, a real advocate for Joe Biden, who positioned himself on the left, quite obviously telling his supporters yesterday, don't believe the polls. And they can't forget 2016 when the polls had Hillary Clinton winning and President Trump ultimately won the race. So the outcomes, maybe we'll have one of the candidates will win sufficient votes on Tuesday, such that statistically we can say a winner has been declared because whatever balance of ballots need to be counted from mail-in ballots or absentee ballots wouldn't cover that gap. It's widely expected there'll be a legal contention of the election by Tuesday morning, that we won't know who won. We have lawyers on both sides revved up across the country at all kinds of voting locations and election offices across each state. Democrats are going to push hard to make sure that their person gets through, and the Republicans are going to do the same. So we may not know the election results on Tuesday or even Wednesday morning. It could take weeks. And President Trump remains president until January 20th, 2021. Going to be interesting. A lot of anxiety about this, right? The country's widely divided, and we'll have an answer hopefully soon. Maybe Tuesday. Cross our fingers. It'll be very unusual for us. Go back to 2000, 2001, the Al Gore, George Bush campaign, where we had the legal hassles in Florida, didn't know the outcome of the election until late December. All right, that's enough of that, but the polls are interesting to see. Now for sure, realclearpolitics.com is one of the best places to go to check your polls on the presidential race. All right, Nicole, I think we're back to you for another report on the markets and market volatility. I think, Nicole, you're going to talk about what I just kind of described. Markets sell off ahead of the elections over uncertainty and growing COVID cases. And then, of course, what will markets do Tuesday morning if we don't have a solution, or for that matter, if one or the other has won? Nicole, what do you have for us?
The stock market posted its worst one-week sell-off since March, with the S&P 500 down almost 6%. The market was feeling pressure from 1, a surge in coronavirus cases, 2, a breakdown in talks on a potential stimulus package from the government to help businesses and individuals impacted by the pandemic, and 3, nervousness about the upcoming presidential election. According to Johns Hopkins, coronavirus cases in the US hit an all-time high this week, and various countries in Europe implemented new lockdowns. As for stimulus, Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi remained at loggerheads, and Mitch McConnell sent the Senate home, dashing any remaining hope for a stimulus package before the election. Technology shares were hit particularly hard, as they have been the big winners thus far during the pandemic. Apple fell over 5% after reporting a 20% decline in iPhone sales and did not provide any guidance for the next quarter. Amazon also fell over 5% after announcing earnings. Twitter lost 21% on slowing user growth, and Facebook fell over 6% with declines on active users, which caught investors by surprise. Google was the only FANG stock to go up, rising around 4% after announcing strong earnings. With the election coming up on Tuesday, investors better buckle their seatbelts for increased volatility in the markets.
Good report, good ending there, that's for sure. And those FANG stocks, by the way, if you've been in those stocks for the past 5 years, 6 years, you've made a fortune, right? So a small pullback isn't too surprising. Also, of course, we had the hearings in Washington, D.C. over the past week, where they took on the potential political interference on the part of those companies. So interesting report. We're elevated, right? Many would argue stocks are overdone to the high side, all dedicated to the fact that the Federal Reserve injected huge amounts of money into the markets. And so maybe overdone. Not surprised we get a sell-off. Uncertainty is not a friend of financial markets. All right, thanks, Nicole, for great reports as always. Markets do not like uncertainty, and we'll see about that on Tuesday. All right, now it's time for a fun segment. It's time for
What did we learn this week?
All right, Jack Zipper, why don't you start us off this week? What did you learn this week?
So today, or not today, but yesterday, this week in bio class, I learned about the process of science is not like as linear as something like the scientific method suggests. So it's like a pinball machine, and it goes between a lot of things, and it goes back to things that you've already done in the past.
All right, so it's derivative, right? Based on stuff from the past?
Yes.
What classes, what teacher is that, Jack?
Miss Varghese.
Miss Varghese, I hear she's outstanding. Right here, what'd you learn this week?
I learned that the last time a Democrat won the state of Texas was 1976.
Whoa, that's a long time. There's some optimism that Texas might turn blue, right, Raheel?
Yep, it's pretty close right now.
Yeah, polls show Texas close, as we were just talking about, although we didn't mention Texas, but that's definitely the case. The demography has changed in Texas, right? More liberals have moved into Texas over the years. A lot of liberals have escaped California to come to Texas, which is a relatively low tax state with great low regulations, good for entrepreneurial activity. And so interesting news there for sure. They might get it again this year. We'll see. What you learned this week, Nicole?
As much as I'd love to talk about AP Economics for the third week in a row, we started the new quarter. So in my U.S. history class, I learned that the number of electors each state has in the Electoral College is comprised of the number of senators, so 2 for every state, plus the number of House of Representatives they have.
Good. And so the Electoral College, remember, is a determining factor for elections, not the popular vote. Expectations are no matter who wins on Tuesday, Biden will have won the popular vote. All right, and that's largely because of the large states that Democrats tend to control. but really interesting. 270 votes they need, 270 or more votes they need to win the Electoral College. Jake, what'd you learn this week?
Well, this week with the new schedule, I recently began calculus, which has been a really interesting class. And I learned something very interesting about the number infinity, because normally infinity doesn't act like a normal number. For example, infinity plus 1 isn't infinity plus 1, it's just infinity. But when working with limits, which has stuff to do with graphs, let's say infinity divided by infinity squared actually isn't just infinity, because when working with limits, it's actually that infinity squared or infinity plus 1 or anything like that is actually technically going towards infinity faster than just regular infinity. And so an infinity divided by infinity squared would actually be called 0, because you're dividing infinity by an infinitely bigger infinity, which is kind of weird to wrap your head around. But when working with calculus, there's a lot of weird stuff like that. But it's really fun to learn stuff like this.
Okay. So what did I learn this week was that, Jack. Holy cow. Calculus. I got to get back into a calculus class. By the way, what we need to do, Jack, is we need to get a counter on you on that one and see how many times you used the word infinity in that statement. That was fun. I think that'll be a fun count for sure. All right. Nice job, everybody, today. What did I learn this week? Great to be back in school. We're back on campus with everyone together. We did a reasonably good job social distancing. We're still there. It was so fun to have everyone back in the classroom. And I learned how exciting it is to be amongst you all when we're all together at once. So always fun to do that. All right, that is.
What did we learn this week?
Okay, now it's time for King Things in Sports. Jake, you're starting us off.
This Friday, November 6th, is the last virtual play reading. It will take place at 8 p.m.
Jake, do we know the play reading, what we're reading?
Well, it's actually a combination of plays. The whole thing is called Bridges, and so it's going to be a couple of different plays together. I'm not sure which all of them is called.
Okay.
But yeah, it's going to be a lot of fun.
Are you involved in that?
I was involved in the first set of readings of the plays.
Yeah, that was really fun. I got to watch some of that. Next, Nicole.
Congratulations to the blue team on winning the Gold vs. Blue Homecoming Challenge. And another huge congratulations to Jackson Grayson, Caroline Curry, and Aaron Rybelov for winning the T-shirt, pumpkin, and baking challenges.
As the weather continues to get colder, all students should be thinking about dressing appropriately, especially since many upper school students are walking to the Italian Center for classes and lunch.
Yeah, I did that walk in the first quarter, and we were blessed with beautiful weather the whole quarter. And now it turned, so that's going to be a rough walk for sure.
The winners of the door decorating competition are Miss Clark's advisor in first place, Miss Bowe's advisor in second place, and Miss Meganello's advisory in third place. Also, if anyone has any photos and costumes from Halloween this year, please send them to Miss Bowe from the yearbook.
All right, now it's time for sports. Jack, Raheel, take us off.
All right. Hello, everybody, and welcome back to another KingCast Sports Update. I'm Raheel Jaswell. In the MLB, for the first time since 1988, the Dodgers are your World Series champions, beating the Tampa Bay Rays 3-1 and winning the series in 6 games. LA trailed 1-0 until Rays manager Kevin Cash decided to pull Blake Snell in the 6th inning, which led to 2 Dodger runs. Then Mookie Betts put the nail in the coffin with a monster solo shot in the 8th. However, Corey Seager was named World Series MVP, being one of the only players to win MVP of the National League Championship Series and World Series back-to-back. In the NFL, Giants O-lineman Will Hernandez has tested positive for COVID and will miss the game versus Tampa Bay. The game is still scheduled to be played on Monday night as no one else has tested positive. Big Blue will have to try and pull off a shocking upset without their best O-lineman. Now over to Jack.
First, let's start with the New York Mets. And this past weekend, the MLB owners have agreed to the sale of the New York Mets to billionaire Steve Cohen. The lifetime Mets fan purchased a 95% stake in the franchise for $2.6 billion. For diehard Mets fan Jack Zipper, there is hope on the horizon. In the NBA, Coach Mike D'Antoni is the new assistant coach for the Brooklyn Nets. D'Antoni completes the reunion of the 2006 Phoenix Suns as he and Amari Stoudemire will be working under former MVP Steve Nash. The Nets will look to bring a championship to Brooklyn as everyone has literally given up on the Knicks. Now back to King, and unfortunately due to Stanford becoming a red zone for COVID, King's athletic action did not take place this Saturday. The school announced their decision on the King School Athletic Instagram page, saying that the health and safety of everyone is by far their number one priority.
Okay,
That's it for me. This is KingCast Sports.
Way to go, Jack. Way to go, Raheel. I hadn't heard about that, Jack, until just this morning. So thanks for keeping that updated on us. And by the way, Monday Night Football, Jason Pierre-Paul, as you know, is on the Buccaneers. He's a little revved up to take on Big Blue again. You remember he broke his neck a little while ago, and he's recovered.
He broke his finger in the fireworks accident.
That's right. Yeah. So he's excited to be back. And of course, remember Jason Pierre-Paul was on the Giants when they took down the Patriots when Brady was a quarterback. Now Brady's got Jason Pierre-Paul on his team. So really interesting. Be watching for that tomorrow night. Nice job on sports as always. All right, now we're going to transition to our guest segment. We have an interesting guest today, Brian Murphy, CEO of Breather, a New York-based real estate and office space agency, and father of our own producer and editor, Jake. Brian, welcome to the KingCast.
How are you?
Good morning. Nice to see you.
Nice to see you.
Thanks for being our first guest on the KingCast. You're a brave man.
Very exciting.
Yeah, okay, good. Today, Brian, we're going to talk about entrepreneurship. Jake has informed us that you are the founder and CEO of Breather, an office space agency based in New York City. So you want to tell us about entrepreneurship, the process of starting businesses, and what the challenge is like. What can you share with us?
Sure. Thanks, Frank. It's nice to meet everyone on this morning. I figured this would be an interesting topic for all you guys, you young folks out there. I've had the privilege of starting many businesses during my career. In fact, the first business I started when I was just 11 years old. So,
wow.
Yeah, so age is not a factor.
Hey, Brian, was that a paper route?
No, it wasn't. It was actually, this kind of leads me to point number 2. It's actually a pie baking business.
Oh, wow.
So I'm sure many of you guys have seen the movie Robots, and there's a famous line in there: "See a need, fill a need." As big.
Oh, that's great.
And sometimes that need can be your own. And in that particular case, I love pie, and so I started a business to bake pies, and it started out for just me, and then it turned into a whole neighborhood business. But it was a great experience to have when I was a kid, because it taught me, wow, you can start a business and you could make money and get a lot of satisfaction out of that.
Where'd you go from there for the pie world, Brian?
So then I finished school. I spent a couple of years in the workforce, learning from some other great entrepreneurs, and then very quickly launched my next business when I was about 23, 24. And haven't looked back since. And I always think, I always kind of say the most important thing that you do is you start with an idea, right? So it's the see a need, fill a need. And it starts with solving a problem. And then you have to make sure that that problem is large enough that you can create a business out of it, something that we call TAM, or total addressable market. Is there enough of that problem to make it worthwhile starting up a business? And then number 3, does that product or service have positive unit economics? And what that simply means is, does it make money when you sell that product or service? Now, there's many products or services that you guys probably use and enjoy that actually have negative unit economics. So for example, how many folks use Uber Eats? I know at least one of you does. That's a business that's worth billions, but has negative unit economics, but that's a topic for another time. And I would say finally, the fourth and most important point is that you have to take action. So the idea is the easy part. The hard part is actually then sitting down and doing the work to bring your product or service to life.
Brian, one of the challenges entrepreneurs often face is startup capital. And we've heard before that you should never start your own business with your own money. Tell us about raising money for entrepreneurship. How has it been for you? Do you believe with that adage? Do you think that fits?
I do, to a point. So I think that in the early stages, what you want to do is you want to prototype your product or service, right? So you can do that with, hopefully you have the ability to do that with your own money, and you get out there and you prototype a product or service, you test it with some people, you get some feedback, you make iterations, you make changes to that product to improve it. And you're going to get to a point where, okay, I sense that there's traction here, that this is something that people are wanting. If that's the case, then you want to scale. And at that point, your options are, if you have capital yourself, you can self-fund. You can use credit cards. You can use friends and family. You can use angel investors, which is really the next level of support. So the first ones I sort of mentioned are all within your sort of orbit. Once you get to angel investors, you're starting to get into a group of folks who specialize in funding very small startup companies. And then once you get past that, then you start talking to venture capitalists.
And Brian, the angel investors and venture capitalists, they want a piece of the business, right?
That's right. So they listen to your idea, and you may be pre-revenue, which means you haven't made any revenue yet, or you have very small. And they'll make a determination as to how much of your business they want in exchange for the capital that they provide to you.
Are there some metrics, Brian, about how much you should give up of your equity in your own business to gain that money?
Yeah, that's a great question, and that's sort of where the art and the science exist. I mean, obviously, you want to give up as little as possible, but to give you enough capital that you can scale the business and get it to the next level. So anywhere from 25 to 35% is I think probably a good number to start with, because you have to make sure you have enough capital in the business that it's worthwhile to yourself. And then B, as you go on to hire people, you need to make sure that you want to have enough capital that you can provide to incentivize those folks joining you in the business.
Now, Brian, your most recent venture obviously is Breathe, the office space agency you have in New York City. Tell us about that and the challenge you're confronting in this unusual economic environment.
Sure. So Breather is an on-demand office provider. So you can book one of our 500 locations all around the world as easily as you can book an Uber, which is a pretty remarkable experience. So we basically Uberized the office and meeting business. And during the pandemic, it's been exceptionally difficult to manage that business because people aren't going into the office and people aren't holding meetings. So one of the things we've had to do, and this is another lesson of being an entrepreneur, is you have to be tough to survive. And so we've had to dramatically cut back on expenses. I've had to reduce my pay to be fair to my employees as well, who I've asked to do the same, or furloughing people, and bring cash flow down to bring cash flow going out down to an absolute minimum. And the whole job here is to survive and get through to the other side. And I've had to do this a couple times. After 9/11 and the dot-com implosion, that was a tough time. We call that a nuclear winter.
Right.
2008, 2009 was the Great Recession. And sometimes in business, you have to hunker down and just get through to the other side. And that's a really important lesson about being an entrepreneur. Is it's not a job. It's your business, and you're the person that has to keep it going and keep it alive.
And you're also the one taking on most of the risk as well.
That's right. You take on all the risk along with your venture capital partners. But that's one, I think, to me, that's one of the most rewarding things about it, is that it is your own business, and the pressure and stress can be enormous, but also on the other side, the rewards can be enormous as well. And I think that charting your own course in life is incredibly satisfying.
Yes, and I think what you're sharing here with us just in our Zoom room is fantastic for these young folks. And of course, our listeners will enjoy that as well. But I can't let something go that you said. You mentioned that you as a CEO cut your pay in line with your employees. A rare comment from a CEO, so kudos to you there. You don't often hear that in the public, do you?
Not as much as you probably should, but it's one of the reasons why I've been able to attract and retain such great talent. I view it, we're all in this together, and I appreciate the opportunity to work with talented people.
Brian, one last question for you. Can we relate you to WeWork? WeWork has kind of got the headline of the industry right now based on what's happened to them over the past year. Is there a corollary between your company and WeWork?
Yeah, they're similar in many ways. I would say that, Adam, that's actually a tale of negative unit economics, where they were spending way more than they were making. That's a mistake that we've tried not to make. Also, I think there's a culture problem there. You saw a CEO with a very large ego who loved to spend a lot of cash, and at the end of the day, it came back to bite them. And flexible office, what we do when people, once we get through this pandemic, the ability, talking about see a need, fill a need, as a CEO, a founder, an entrepreneur, the idea of being able to take just as much office space as I needed it, where and when I need it, is incredibly attractive. It's very similar to the idea of purchasing software as a service as opposed to licensing software. You take what I need when I need it, and only have that expense then. It's incredibly attractive. So as we come out of this period, I think it'll be even more attractive.
Brian, I want to thank you for joining us today for your outstanding insight into these important issues for young folks. And hopefully we'll have you on again sometime. Thanks again.
Thank you for the opportunity.
Bye-bye, Brian.
Thanks.
That was our guest today, Brian Murphy, CEO of Breather, father of our own Jake Murphy. Jake, thanks for bringing that together with us. A very impressive conversation there with your dad. All right, let's move on. Now for economy and markets. I have something real quick for the economy and markets just before we get going. Something I found this week, which reveals the insanity of markets at the moment. I think driven largely by Robinhood traders, but I don't know about that precisely. You guys all know about Robinhood, the trading platform?
Yeah. No, I do know.
For young people. Anyway, though Robinhood traders have been responsible for bringing many stocks to the high side. Anyway, Zoom Communications is prime example of an organization benefiting from the transition from work to home. Zoom daily users have skyrocketed since March to 300 million users as of April 2020. And as of this week, Zoom, the teleconferencing system, which we're using right now, which is wonderful, and we enjoy it for sure, doesn't really make too much, right? It's really a tech company, is now more valuable than the largest oil company on the planet, ExxonMobil. That's in terms of market capitalization, right? The price of the share times the number of shares outstanding. Zoom is worth 140 billion, and as of today, ExxonMobil is worth 137 billion. It reveals kind of the chaotic nature of markets right now and the misplaced investing by some. Obviously, Zoom has benefited from the obvious shutdowns here. And ExxonMobil's been hurt, right? The shutdown reduced demand for oil and gasoline. And every energy sector company is suffering as well. But really interesting to see that kind of change in relationships between a company that provides teleconferencing, a company that employs 75,000 people in almost every country in the world, providing energy that allows the economy to go. So really interesting little headline there about how stocks can get a little bit too up to the high side. And I think Zoom might be one of those. If we come out of lockdown, what are we going to do with Zoom stock? Are we going to buy it?
It's probably going to drop.
We're going to sell it, right?
Yeah.
Yeah, there's an opportunity. If we come out of lockdowns relatively soon, look for an opportunity to sell Zoom. I hate to say that. I love Zoom. I've been using Zoom since 2014 in my small business, but probably a little bit too much to the high side there. All right, now it's time for economy in the markets. Check on data, check on the economy, check on prices. Raheel, start us off. For the last week, what do we have for data?
On Friday, October Chicago Purchasing Managers Index 61.1 versus 62.4 in August.
On Thursday, initial unemployment claims, week ending 10/24, 751,000 versus 791,000 in the prior week. And September pending home sales was down 2.2% versus 8.8% in August.
Wednesday, MBA mortgage applications, week ending 10/23, 1.7% versus down 0.6% in prior week. September international trade in goods down 79 billion versus down 83 billion in August.
On Tuesday, September durable goods orders 1.9% versus 0.4% in August, and October consumer confidence 100.9 versus 101.3.
On Monday, September new home sales 959K on annualized basis versus 994K in August.
Okay, so a couple of good data points on the week. Initial claims continue to fall below 800,000 again for our second week. You may have noticed 751K. Mortgage applications up again this week. Not unusual. It's often a back and forth kind of scenario. Durable goods orders higher than expected. So positive signs as we continue to climb out of this pandemic recession. So good things there. Now we start with data for this week. Jack, start us off. What's our data for this week?
So on Monday, we have September construction spending and October ISM manufacturing index.
Tuesday, September factory orders.
On Wednesday, we have MBA mortgage applications, week ending 10/30, ADP employment report, international trade balance, goods and services, and ISM non-manufacturing index.
On Thursday, initial unemployment claims, week ending 10/31, Federal Reserve interest rates decision.
And on Friday, we have October employment situation report.
Okay, so that data point, Jack, employment situation report, is the mother of all data points in the world. The whole world will be ready for this data point on Friday. At 8:29 and 59 seconds, all traders will be poised over their keyboards, ready to react to what is the most important data point. What's the health of the U.S. labor market? We're the largest economy. You need to know what's going on in the labor market, especially in this pandemic recession. We get non-farm payrolls, net change in jobs. We have unemployment rate. We get average hourly earnings, and we get the average work week. Okay, all on Friday. So people will pay attention for that for sure. On Thursday, the Fed will conclude their FOMC meeting, and they will expect it not to change rates. Federal funds rate is 0 to 0.25% right now. It should remain there. Interesting that they'll have this meeting just before the non-farm payroll data, but the Fed will already have that data in their possession when they make their decision. All right, now it's time to check on prices. Remember, prices react to data. We follow data, then we follow markets, and of course, that's about trading and investing. So let's go ahead and start off. Jake, start us off. S&P 500.
S&P 500, 3,270, down 195 points.
NASDAQ 10,911, down 637 points.
3-month Treasury, 0.096%, up 0.002%.
10-year Treasury, 0.874%, up 0.033%.
30-year Treasury, 1.658%, up 0.017%.
Euro dollar 1.1650, down 310 points.
Dollar yen, 104.64, down 5 points.
Sterling 1.294, down 100 points.
Dollar CAD, 1.3320, up 190 points.
West Texas Intermediate 35.72, down $4.
Brent, 37.46, down 4.31.
Gasoline $1.05, down 9 cents.
And gold, 1878, down $24.
Okay, nice job. Now, interesting things to point out here. Dollar strength has reappeared, okay, on the back of stock weakness. Okay, notice gold is also offered dollar strength, gold weakness. That's usually how that correlation works. Also notice oil is back below $40, both for West Texas out of Texas and Brent out of the North Sea. Okay, now it's time to end the show with our friendly reminders. Go ahead, start us off, Jake.
Do your reading.
Do your homework.
Come to class prepared.
Use your blinker when making turns or switching lanes.
Stop signs mean stop.
And no texting while driving. And that is it for us. Thanks to our team, Raheel, Jack, Jake, Nicole. We're getting really good at this. Join us again next week. And tell your friends and family to listen to the KingCast at kingschoolct.org campus life page. And that's it. We're out of here.